Let's get some business news now for this Monday morning. Joining us, Peter Switzer, founder of the Switzer Report. Pete, good morning to you. So what are the big market movers this week?
Yeah, Peter, I think they're going to be watching all the kinds of things that are going to settle the story between, is US inflation really falling as fast as we saw last week? And if so, could there be a recession on the horizon? And that's been a bit of the tug-of-war that happened last week. You know, the US inflation number came in at 5%, much lower than expected. Then later in the week, producer price index came in at 2.7%, a great number. Okay, so Americans and Wall Street are saying, great, inflation's on the way down, maybe interest rate rises are over, and then along comes a retail sales number down 1% when they were expecting 0.5%. So now they're worried about recession. So there's a battle between the two. So watching the economic data is going to be really important. And also company reporting. US company reporting starts this week. Well, started late last week, and the banks reported pretty well. But this week we see the likes of Tesla and Johnson & Johnson. And they're going to be looking at all the companies to try and work out, has the impacts of all those interest rate rises in the US started to hit companies very hard? The consensus view is overall profits will be down about 5%, which is not bad, but they'll be watching that. And at the moment, I think the optimists have the upper hand over the pessimists on the US stock market.
Well, I mean, yeah, you look at the optimism in the Australian markets last week. We'll get to that in a second, but you mentioned data. The inflation data last week came in the US better than expected. So do you believe that those rate rises in the US from the Fed Reserve are over, Pete?
Yeah, it's a really good point, Pete. And so I think the argument that the Fed has to pause with their next meeting, that makes a lot of sense. And that's why the data flow is going to be also important as well. We'll see purchasing managers index later this week. That's always an interesting sign of what's going on in the US economy. And I think there's a real good chance that the Fed may well be over and done with these interest rate rises, particularly when you look at that retail number. I think the market was quite shocked about that because they rose nearly every day last week until Friday, and that retail number coming in down 1% for the month rather than 0.5%. I think that really took the wind out of the sails of a lot of people out there who thought that maybe a recession was going to be mild. And I still think it will be, but that's the kind of story that is going on in US markets right now.
Okay, and what about our markets? You know, we saw the job numbers come in last week, more people employed than originally suspected. So does this mean the RBA lifts one more time?
Yeah, look, Pete, I think that number really did surprise a lot of people. Unemployment staying at 3.5% after 10 interest rate rises. Now, by the way, interest rates come with a long lag. And so Dr. Phil Lowe would love, I think, not to raise interest rates anymore. And particularly with this mortgage cliff coming along with so many people going from fixed to variable home loans, I think he would love not to give any more, but he's going to have to watch the data. And I think unemployment has to start rising a bit for him to justify no more rate rises.
What about our markets, Pete? You know, we've been on a pretty good run lately, I've got to say. It's been nice to see for those who are involved. But how do you expect that to go this week?
Yeah, Pete, I think we're a rough chance to keep sneaking higher. A curveball from the US could knock the confidence. We're supposed to open up 12 points higher today. And I do believe that we're heading in the right direction for stocks because, you know, I said to you many months ago, once we get the feeling we're near the top of the interest rate rise, then I think the market will start moving in that direction. The US market's up 6.5% this year, which is, you know, a nice rise, and we're up even a bit more than that. So I just think we're heading in the right direction. A curveball could come along, but I think at this point in time, there's a feeling that interest rates are close to the top, and that's going to be good for the stock market.
Yeah, good for our super accounts. Thanks, Pete. We'll talk to you soon.
Cheers, mate.